Welcome to Market Matters. I'm Khoo Chong, and of course I'm joined by Charlotte Chong on this Merry Christmas and Happy New Year, episode of the Market Matters. Company in the news, Teck Consolidated Bhd. No, it's not a new dish on the Chinese menu. It's a Sabah-based trading company. Now they closed the day 3% lower, or 1 cent to 37 cents. The news is that Bursa Malaysia slapped an Pagan on them, an after their
unusual
23%
unusual market activity
surge.
It rose 22.58% yesterday to close at about 38 cents with a trading volume of 143.4 million ringgit. Now this company, they actually do consumer product distributing. It's a consumer product distributing companies. They do bakery products as well, and they have their in-house brands which is called Oreo and Creamels. Have you tried the brand before?
I don't know, but they're very much an East Malaysian business because they only listed in November, in fact last month.
November 25th.
15 cents reference price. I spoke to the executive director, Dexter Lau. He reckoned that the bankers actually underpriced their shares. So whoever got in early on the ground floor has made a lot of money because they closed today at 36 cents.
But it opened at 30 cents that day, doubled
it
the
doubled
share
on the
price.
day itself, and it's gone berserk since then. So I mean, this is actually a trading company. It's a bit like Harrison Crossfield or Datuk Kramat Smelting Holdings, DKSH. In terms of, they've got something like 36 brands, 10,300 consumer products, 194 third-party brands, and about 6,500 distribution selling. So in a way, this is a consumer play on East Malaysia, which of course, as we know, is growing in affluence.
It is also a family-oriented private company that has been in operation for 77 years. But my question is, because they say they are not looking to expand their business in Peninsular Malaysia, I wonder how many, the population in East Malaysia is so tiny. It's about 5 million population. So
I asked him about this.
Why
and I said,
wouldn't they expand?
Correct. And he says, what for? The market, the addressable target market with a high growth prospect is in East Malaysia. Peninsula it might be worth more for sure, but it's so competitive.
And it's quite saturated.
Quite saturated. So I think something like 94% of the business is from the trading side, but a little bit of their revenue comes from their own bakery and their own consumer goods businesses. Like they do frozen and dried food products. They do the brand names of Brambles, Ori and Creamels or something.
They're also eyeing expansion into Brunei by establishing a distribution center there. So I think probably they see more opportunity in the country itself. Now, discussions are ongoing for a 1.54 million ringgit acquisition of a distribution company in Brunei, which they say they are intent to conclude early next year. However, the company say, like what I said just now, they have no plans to expand into Peninsular Malaysia.
Interesting, right? At 34 cents, you have to think that right now shares are overvalued. So, expensive, but you have to watch the earnings because obviously as an ace market stock, lots of growth prospects there. So to summarize, Teck Chong or KTC, excuse me, slapped with an after yesterday's 23% surge. It's a family-controlled business, spanning 8 decades, listed last month at 15 cents. The shares closed today at a stratospheric 36 cents. It's a Sabah East Malaysia consumer play with its more than 10,300 consumer products from 36 brands and 194 third-party brands. Okay, let's move on to our broker's call, and it comes in terms of Yinson Holdings, the oil and gas services firm. Closed today and changed at $2.90. The share started rallying about 2 weeks ago, like other oil and gas counters. Yeah,
today it closed unchanged at RM2.90. But so it actually reported Q3 earnings yesterday. Revenue was down 3.5% to 246 million ringgit. Net profit down 1.2% to 85.6 million ringgit, and that's because lower revenue due to a lower contribution from two segments, from transport segment and the other one is trading segment.
That's because they sold it, right? Because at one point in time they were a haulage company. They used to have all these lorries and trucks.
Logistics.
Correct, logistics. And they used to carry commodity products from the all the points in East
But I believe why
Malaysia.
they cease operation, that's because they don't see a lot of volume, or they don't see a lot of demand coming from that
They were
segment
getting whacked in fuel prices. They were getting whacked because at that point in time, remember, oil was about $100 a barrel, $80 a barrel. So they got out of that business. They did a deal with their Vietnamese partners and the government, and they started with one floating platform. And look at where they are now, right? They've split already. So despite those numbers at a headline basis, at core level, the results were ahead of expectations, and Maybank actually reckons this is still a target price of $4.35 and a buy recommendation.
So what Kenanga said was they also maintain an outperform call with a higher target price of RM4.04 compared with from RM3.89. And the company Kenanga actually said that they are not surprised it was previously guided by the management on the utilization of the proceeds, because the result actually came in within their expectations as well, and Yinson is not expected to secure another mega FPSO contract this year to avoid overstressing its balance sheet for capex. But they could still stand a chance to secure a mid-size FPSO project through JV, and now they have been doing a lot of restructuring exercise, and they want to free up their balance sheet to get this mid-size FPSO project.
Well, Kenanga has a target price of 404. They raised it from 389.
Yeah,
but the interesting part, which is a bit of a catalyst for Yinson, is the fact that they sold their non-core, the trading and haulage business. They sold it for 160 million ringgit, which they're going to pay back in special dividends of 15-cent dividend per share, which is a nice surprise because the analysts expected a number which was lower than that.
So actually, this company, they are trying to maintain Sharia compliant status. Just now I asked you the question, by way of converting their existing borrowings into Islamic loan. And the thing is, right, if they are not Sharia compliant, they wouldn't be able to bid for projects from Petronas. Am I right?
Correct, yeah, because you've got to be eligible on the front, and of course the Middle East and all the other OIC countries, which obviously also produces as well. So I guess for the next year ahead, the analysts, especially from Maybank, they reckon that Yinson will win maybe 1 to 2 new jobs next year, which is realistic. And if that happens, it's going to be a re-rating to sentiment and earnings.
And a catalyst.
A catalyst, that's right. So to summarize, for Yinson Holdings, Q3 profit has exceeded expectations at core level. There was a dividend surprise from disposal of non-oil and gas assets. And thirdly, Yinson is still seen as a growth stock with expected upcoming FPSO wins on the oil and gas services front. So that's a wrap from us for this 29th of December. Thank you for watching. For more, go to theedgemarkets.com or pick up a copy of the Edge newspaper from all reputable newsstands. Thank you for watching and good night.